Hey guys and gals, this is Blake Morrow, just making sure you guys can hear me okay. And we're trying to figure out this widget. Let's see, Stella. Oh, it just
It's
popped in.
visible. Yep.
It just popped in. Hey, very good, very good. All right, cool. Glad you guys are all here. I know some of you are, it's the first day. We're bound to have a little bit of miscommunication, if you will. But I don't want to keep everybody waiting. I want to get started. I know a lot of you have rearranged your schedules to attend this webinar. I just want to thank you guys for all your support, guys and gals. So we're going to start with actually the cables moving lower as we speak. It's coming out of the wedge, and I think you're seeing the pound play a little bit of catch up to the euro dollar. Does that mean the cables going to continue to speed lower? I don't know. I mean, the dollar looks pretty strong right now. I would venture to guess that the sterling is heading back down to 135.35, which is going to be this 38% retracement of this move. You can see it right here. But I'm going to write down today at 136 being support. Oops. Because that is most recent spike lows that have held. But also keep in mind that the cable's been relatively outperforming the rest of the market. So just keep that in mind. And to be honest, if stocks do come down, the pound is vulnerable. But if you really want to play it on the long side, just look at crosses versus trading it against the dollar, because if you can see stocks are coming down just a little bit right now. And if they continue to come down, then we're going to see some more dollar strength. All right, 137.10 is resistance, which is the spike high overnight, and that's the resistance that's going to be prevalent today. I don't think that that's major resistance. We could go up there and take it out, but it's not like it's not major. I wouldn't stand in the way if we got it. I would be more of, oh, we broke this high, so we're probably going to test the recent trend highs. Euro's weak. It's consolidating its losses, and if you look on an intraday basis, we're just flagging. That's it. All right. So I think the euro's in store for another leg lower. It's just how low are we going to go? Well, that's where you start looking at 120, because 120 is critical. That's critical support for a lot of reasons. Let me get rid of these little red lines here. Okay. It's critical for a lot of reasons, because it's the breakout point. You can see this red line here, right? It's the breakout point, but it's also this. Let's go to the daily chart. This is from May current uptrend line. That comes in right at 120. Yeah, if that gets taken out, man, it's going to get ugly. I mean, the dollar is going to start squeezing like it's nobody's business. You have to realize, and I know I've said this, and I'll say it again, that the market is aggressively short dollars right now. What if that unwinds a little bit? You saw what happened in GameStop, and you guys have seen short squeezes in the FX market. It's not like that's, that doesn't happen. It happens. And if it happens, you're probably going to see the euro slump all the way into the teens. What I say teens, it's not 119, probably like into the mid, 115, 116 level. It's entirely possible. Think about what that does to the rest of the dollar pairs out there. Okay. So anyway, I'm just, I guess I should write down resistance today, intraday. I want to say it's going to be right here at 120.60, but I'd give it more room than that. I'd probably look at these spike lows here. We could get up to 120.70 today. I know anybody who's long is like, oh, please let me get out at 120.70, because you got to think about, if you're long the euro right now and you're long and wrong, what are you thinking? Oh crap, I just went out of this thing. Any rally, give me a 10 pip pop, I'll sell it. You know what I mean? And Amira said, yeah, we got a head and shoulder pattern. Yes, this one's not as pretty as the dollar index or as in the Swissy. Those inverted head and shoulder patterns are much better looking, in my opinion. Aussie gets dangerous below, let's call it 75.80. I already think we're, the risk of us going to 75 cents is pretty high, but that's the 38% retracement, guys. 75.80 is intraday. 75.03 is the 38% retracement of this October low to high. That's where the 38% retracement comes in. Kiwi. Support intraday is going to be 71.40. I'm going to say 71. Ooh, sharp. Shoot. I'm sorry. 71 cents is obviously key. And we got employment data out of New Zealand tonight, just so you know. I forgot to put in the Aussie resistance. Sorry. Let's go. Aussie resistance. 76.50, I guess. This does have to flip to bearish. Sorry. This, by the way, while we're below 120.60, 120.70, we have to stay bearish. We have to. I mean, we just have to for now. Even the cable, I think it has to get below 136 before we turn bearish there. So Kiwi's just still in a wedge. Remember, we have employment data tonight, so we could come up and see 72.20 post-employment data, especially if it continues, if New Zealand's economy. I mean, look, they were just they are actually having concerts in New Zealand. Concerts, like in person. I think New Zealand's economy is probably doing relatively well compared to the rest of us.
What's that like? I've forgotten. What's that like?
Concert? I know. Can you imagine like going to a concert? How cool is that? Okay. Dollar CAD. You probably have to look at it something like this. We were consolidating just these recent moves. And I would be looking at right now at 128.60 or 127.85. So you kind of got to let that break. 128.60, 127. What did I say? 127.75. Okay. Swissy's bullish. Any dip now down to 89.50 is probably going to be very well supported. 90 is resistance. That's obvious. I don't have to do a lot of work on the Swissy because you guys already know this. But look, you know what? We can do this really fast. We know all this. Let me remove those fibs. Okay, so let's go from this high to the low. And let's put it a different color so we can see. So we're above the 38% retracement. So really the 50% retracement comes above 90 cents. So, you know, we're pushing up against, this is support here. We're pushing up against it. I mean, that we get above 90 cents and that should open it up to 90.30 probably, you know. Dollar yen. I sold a little dollar yen just a little bit ago. The reason why, rally into the 161% extension. So that comes in at 105. Let's just call it 105.10. Okay. Support. Oh, and by the way, this is relative strength is divergent, price is divergent. So I do think we'll pull back, but support today should be 104.60, easy. I mean that should hold is what I meant to say. 104.60. That should be pretty strong support. We might get down to 104.40, but I would say 104.60 is probably going to be pretty good support. Yeah, Jack says rugby stadiums filled with fans in New Zealand. Incredible. I mean, packed, no masks, etc. Crazy. Helps living on an island. Hell yeah. I mean, it's nuts. Okay, dollar index. Inverted head and shoulder pattern. We are at the 38% retracement. We wrote that down yesterday, but I would be concerned with the, I think we wrote it down yesterday. 91. So we're at a 38% retracement, which is 91.15. These little spike highs right here, you can see it, spike high. It comes in at 91.25. That's very minor resistance. But we're bullish. And you got to be bullish while we're above 90.80. See that? That was a spike low here. You can see it right through here. You see it? Spike, 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 spike. So while we're above 90.80, you got to be bullish. And is it counter trend? Yeah, I think so. I think the dollar move is counter trend. You know, just because, you know, if you're bullish dollars, I wouldn't be too aggressive right now. I mean, this is a pretty severe downtrend, right? But we can get counter trend moves, and they could be, you know, vicious. And right now we're seeing it. S&P market's so strong. I thought we would stall yesterday here at the at 37.70. I mean, we might make new lows here. You know, I shouldn't say that. We might make a lower high here. I'm hoping we do. But next resistance comes in at 38.25. It's like this market is up every day. It's so maddening for all of us, not just you. Support today will be 37.80, but I'd give it more than that because the S&P is pretty volatile right now. So I think if we pull back, 37.60 may offer better support. Let me get rid of this. This is irrelevant. $37.60. I am just keeping it in range because it's not bearish, and we are starting to make lower highs now. So it's not bullish. It's just range bound, and it's very frustrating. Yes, I think it's very frustrating. Okay. Finishing up here. Dollar MEX. Dollar MEX has pulled back pretty aggressively today. Now, the 38% retracement is right here. But I mean, we continue to hit new lows. I mean, we might trade down to 20.07. I don't know why the dollar MEX is so heavy right now. It just is. Resistance is going to be 20.35, which is that trend line. I was so bullish 2 days ago, and now it's just kind of, I mean, we're down 1.1% in the dollar MEX today. For why? I have no idea. Zero idea. US dollar, Norwegian krona. Okay, so we get, it has to be right here. It's this trend line and the breakdown point, right? It all comes in at 865. That's it. $865 is key resistance. Support. $850, $855. I mean, I guess $855 seems to be holding pretty well. And last but not least, gold. One of the things that I think I wrote this down last night. I'm pretty sure either that or I said it during the daily roundup. Oh, the inverted head and shoulder pattern may be developing, but a break of the 1880 levels needed to get bulls engaged. What I wrote down, what I said yesterday in the webinar and the daily roundup is that, you know, a lot of people have bought gold thinking, okay, gold's going to play some catch up to silver. The problem is it's not, and we've slumped towards support. So I really think that, you know, if we break through 1830, we might actually trade down to 1802 again. So, you know, I'm going to write that down. 1800, 1830, and then resistance. Now, I mean, think about all the people that are bullish. They're like, oh, you know, what's happening? 1875 is resistance. Okay, so there's your bias chart. It's complete. You know, obviously the equity market's just open, and I'm going to say, hey guys, be really careful up here. You know, stocks continue to be, you know, very well bid. And you know, if you're going to fade risk, I would be watching the dollar Mexican peso until we get above 20. In my opinion, we have to get back above 20.25. And if the dollar Mexican peso starts to get back above 20.25, I would think that, you know, maybe risk is about ready to turn. So I'm looking at, you can see I have an alarm set up 2026. So this is kind of where I'm looking at. I want to see that break. And then I might, you know, say, oh, okay, maybe stocks might come down a little bit. But market's just open. It's a little volatile right now. And good morning, Steve, Stelios. How you guys doing? Again, number 2.0.
It's Groundhog Day again.
Yeah, hey, stocks are up.
Yeah.
Sun's out, guns out, stocks up.
Very, very true.
Yeah. Anyway, I was going to try to rhyme something, but that doesn't work. Well, hey guys, I'm going to pass it over to you. I want to thank you all for your support and welcome to Phase 2.0. It's nice to have you all here. We got a big group today, which is awesome. So
we do.
Yeah. So guys, I'm going to pass it over to you, and everybody have a great trading day. I'll see you guys in the chat room.
Thank you, mate.
Thank you,
Thanks,
Blaker.
guys.
I think we covered a lot of stuff on the first half of phase, so I don't actually have that much more to say. But we can have a look at some crosses. So
I'm kidding.
but we can have a look at some crosses. There's some interesting moves in the sterling pairs for sure, and the euro as well. The euro is second day in a row that it's not struggling, but it's kind of grinding lower. I mean, we can have a look at a few of those crosses, I think.
Let me bring the 4-hour charts as well. Here they are. And yes, we can have a look at a lot of things. And don't forget, guys, and gals, of course, that you can request anything you want to see. Today, there is no Spanish webinar, so we don't really have a time restriction as well. So the euro has broken down, retested this little flag, and is pushing lower. I think all of this is still a part of clearly a corrective move in my mind. I mean, just look at the context here, right? We've just retraced a small fraction of what the euro has made since a year ago. Not even, like 10 months ago, 11 months ago. We bottomed out at close to the end of March of 2020, and we went from 106 when once again we were hearing everybody talk about parity and parity and parity. I remember I've said 100 times in this show that euro and pound are not going to parity, and I was even saying that when we were trading close to parity. And you know, now it's natural that at some point, you know, there needed to be some corrective moves lower. Now, somebody is mentioning, I see that there is a head and shoulder formation. I'm assuming you're looking at this, or you're looking at the bigger picture, like shoulder.
Probably head. That one is a lot more.
Shoulder. Yeah. So, yeah, I mean, you can make the case that this is a head and shoulder formation, like this, which we're just breaking down from, which would imply a measured target of 117.5, let's say roughly. It can happen. It can definitely happen, and it's still going to be just a healthy correction, right? Because that's going to be like not even the 78.6 of just the last bullish leg higher, right? Just the last bullish leg higher. So yeah, I mean, it can happen. Technically speaking, it is a valid interpretation, right? There it is. So yeah, that can be the case. Of course, that would imply by definition a much stronger DXY, because we know how much the DXY is influenced by euro. It's like the main currency in the basket, right? And at the same time, we've talked about it, the inverted head and shoulders formation in the DXY, with 91 being the neckline. And as we see today, we are making the move above 91. So it is still early on the day, admittedly. Not a coincidence, obviously, that at the same time that the Euro USD is trying to break down from that head and shoulders formation, the DXY is trying to break out from an inverted head and shoulders formation. If you invert one or the other and you overlay them, you'll see that they're more or less the same thing. So divergences are rather minor. Now, technically speaking, what is also interesting is the fact that, what was it, like 2, 4, 6, 8 consecutive days, the cable was attempting to break through this confluence of resistances. We talked about the importance of this pivot area at 137.40, and 8 consecutive days it kept failing. And you know what they say, what is unable to move one direction inevitably will have to eventually move it to the other direction, right? And yesterday's candle, admittedly, is a very bearish one. Why? Because it's a Marubozu closing black and an outside candle as well, which means that we actually close the day at the lows of the day, while we had earlier traded higher than yesterday's high. So quite a bearish candlestick. Today, so far, the candlestick is also bearish, a shooting star. I think from a risk reward perspective, and I've said that many times during the past few days, I think that from a risk reward perspective, the cable remains a very, very good selling opportunity against the highs, because we're still very, very close to the highs. And the initial potential from a move lower from here is a retest of this channel, which currently passes from 134 and change, which means there is a 200 pip downside potential to begin with, because if we break through this channel, the downside potential opens up a lot more, right? So the risk reward ratio is roughly 2-to-1 to begin with, which is a very healthy risk reward ratio. I mean, we're roughly 100 pips from the highs, and we have a 200 pip downside potential as a first target. So I do think it is definitely interesting. Now, a good segue to another question that we had, which has to do with the pound Kiwi. Now, listen, for me, this is an important chart here. Why? You first need to look at the big picture. What is the big picture? Is that we've had this long-term ascending channel, right? We broke below it. We came back, we retested it, we got rejected. But we found support once again at this important support. We came again up, we retested it, we failed once again. We pulled back a little bit, we retested it, third time, third rejection. So, technically speaking, I can't really turn bullish as long as this long-term channel trendline support keeps acting as a resistance and keeps rejecting price action. Now, on the other hand, somebody can say, yeah, but we also have this strong support here at 186.30, right? Yeah, we do. But are we currently closer to that support or to this resistance? Clearly to that resistance, right? So from a risk reward perspective, clearly, if I had to take a position now, that would be short. Now, if we break through this and back into this channel once again, things will become, let's say, complicated. And technically speaking, we can then say that we have a double bottom in hand, right? Because this is your double bottom. We break through there. This is a range of, what is it, 186 and change to 192. Let's say 550. Yeah, I mean, we have another 550 pips we can expand to the upside, right? And you can also look at it as a false breakdown from this channel. So, then it is a bullish development, actually. So this is a pivot trend line. It's not horizontal, but it's almost horizontal. I mean, the inclination is, the angle is actually small. I think you should decide what you want to do based on this pivot area, and that's what I think about it. Now, if you look at the pound Aussie actually diverged and never broke down from this trend line support. So it has produced a nice rebound out of it. It has also broken out from this trend line resistance, which admittedly, it's not a very, important trend line, right? It's not that it connects like many different peaks. So it's a little bit arbitrary. That's why I also put it there, like with an as an intermittent trend line. And so far, this rebound is not like, super impulsive or whatever, but nobody said that it can't extend more. Now, I've said that before, and you know that it's definitely the case. If you really want to see these type of pairs fly, you know what has to happen here, right? And when I say these type of pairs, in essence, I'm including the Euro-Aussie, right, and the Euro-Kiwi. You know what has to happen, and what has to happen here is that we need to see a rejection in equities, a rejection in risk assets. So in essence, what we want to see is seeing equities roll over once again, and if that happens, you should see Euro-Aussie, Euro-Kiwi, Pound-Aussie, Pound-Kiwi accelerating to the upside, quite significantly, because we know that there is a strong inverse
Steve,
correlation. Yes,
one note. If I recall correctly, in March, the big drop in equities, sterling, Pound Kiwi, Pound Aussie also dropped. I need to check that. But I think
might be the case. It's rare. These correlations are not bulletproof, because almost no correlation in the market is bulletproof, right? At least not over a long period of time. But there's strong correlations, and why that's the case, we know why, because Aussie and Kiwi are commodity currencies. Commodity currencies tend to move, are well correlated with risk. Now, on the other hand, Stelio, we know very well that, especially during the past year, the pound was also playing in its own tune, because it had its own, underlying issues moving the market, which was, the expectations of Brexit. Is it going to be orderly? Is it going to
I
be
actually
disorderly?
just had a look at them, and Pound Kiwi was roughly flat. I mean, there was a spike on one day, but then it was flat. So I remembered wrong. I thought I remembered it was it dropped in like March and April, but it started dropping in late April, then May. That's
By the way, we're seeing, as you see, we're seeing quite a lot of our alerts triggering here,
Yes.
and that's because it seems that as we're speaking, the dollar is making quite a move. Dollar pairs are in essence dumping. Euro is breaking cleanly, because if you want to see, we looked at the 4-hour chart. If you want to see it on a daily chart, this looks like a first leg lower, triangle, and there's one more leg lower missing here. That's what I had also posted on the end of week analysis, right? And I'm looking as a first area of interest, this horizontal support resistance area, roughly above 118. Of course, on the other hand, if you want to look at it as a head and shoulders formation, we saw that the measured target points to even lower than that, closer to what we see here, the 78.6, right? But I mean, in all actuality, it doesn't really matter. I mean, if you're in the right side of this trade, we stop here, we stop there, you should still comfortably be in profit and have the ability to manage this trade in a in a good way. I mean, make it work for you and make you money less or more. Depends on how you want to handle it. If you're taking partial profits, if you're trailing your stop losses, so on and so forth. Let me see. Platinum. Yeah, there's a question about platinum. Listen, my idea about platinum hasn't changed. So far, what I see here is probably a bullish consolidation. So a lot has to happen for me to change my opinion here. I think platinum is going to eventually trade a lot higher, and I think that eventual is not far away into the future, right? Now, something else you should pay attention to, and I do pay attention to it, as you know, is copper. Copper seems to be trying to actually convincingly break through this inclined head and shoulders formation today. If that's the case and it gets confirmed, I will be very, very skeptical about the continuation higher in stocks. Although, that's why I'm coming back to this chart, which we mentioned in the first part of the webinar as well. Although, to be honest, one other asset that is nicely correlated with risk is not showing any type of weakness, and this is crude oil, right? So crude oil has broken out. It can even move towards 57.5. So these two markets at this time are sending like diverging signals, in essence. If you want to talk about diverging signals as well, you can have a look at the Aussie market, right? The Aussie is quite weak, actually testing this potential flag formation, although I don't like it anymore as a flag. And why don't I like it anymore as a flag? Because it's now too long to be a flag. It's starting to get too long to be a flag, and we're testing this support. So, when we had this conversation many days ago, when we were somewhere here, I would be very, very confident, and I was confident that the path of least resistance remains higher. Now that we've kept on building this type of price action and it looks heavy, I've started getting worried that the chances now are more or less balanced between a breakdown or a continuation higher. And the more the days pass, the more that's the case. What is holding me from being more bearish is the fact that Kiwi looks much better, and we know that in the long term, despite this strong move lower in the Aussie Kiwi. The Aussie Kiwi, by the way, was a nice trade. And why is that? But because we had this long-term channel which rejected price action once again. Actually, we got rejected a little bit before we made it to the channel, but the risk reward was already appealing. The 61 was there, 61.8 was there, and we're seeing this somewhat of a divergence between Aussie and Kiwi due to this move in the Aussie Kiwi. But keep in mind that one might be behaving much better than the other for a period of time, but don't expect one of them to be moving higher and the other one to be moving lower, right? I mean, worst case scenario, it's what we see today, for example, which is the Kiwi being barely negative while the Aussie being quite a lot more negative, right? So don't expect them to diverge in direction. You can expect them to diverge in magnitude of the move, right? But not in that direction. Don't expect Kiwi to close positive, Aussie to close negative. For that to happen, I mean, we have to have some great piece of news, some big news from one of the two economies, for example, right? That only affects the specific economy. But even if that was the case, knowing how much these markets are algo driven, I'm pretty sure that there are enough algos out there that once they saw a big move, let's assume that the move was in Kiwi, right? Let's say we had some big news about New Zealand, right? And we got a spike in the Kiwi. I'm pretty sure that there are enough algos out there that the moment that they saw a spike in Kiwi, they would rush in the market to buy some Aussie as well. So keep that in mind. Let me see what other questions we have. Okay. Guys and girls, I don't see any more questions, so I'm going to give you a little bit more time to think if there's something else you want to ask about. But let me tell you something. Another divergence I'm paying attention to. I did cover platinum just like 5 minutes ago. Yes, and I'm going to have a look at euro yen. One more thing that I pay close attention to, and as I'm speaking about this, I'm going to give you the time to ask more questions if you have, is this divergence. And what am I talking about? Look at USD CAD attempting to break higher, and in any case, being above its lows, right? As the same applies to USD NOK, although admittedly, so far, especially in USD NOK, if you see this type of move, it doesn't look impulsive in any way, right? That's why I haven't closed my position yet, because this move higher, at least so far, looks very weak and corrective. But you can see the obvious divergence with crude oil, right? And let me make it clear. Let's pull the USD CAD. Wasn't it in compare that you overlaid? Did they change it? Did they change it?
Isn't it that compare? Yeah, go.
It used to.
No, that puts them on the same
Yeah,
axis.
where did they put it actually? In compare, there used to be like another, thing that was called like overlay. They probably changed it. Let me see. Any chance I can get it from here?
I know. Click compare, find the ticker you want, and then hover over it. Hover over USD oil, and then no, just hover, and you have 3 options: same scale, new scale, whatever. You don't want same scale; it's going to be weird. So new price scale, I think, is what you want, right?
Okay, good. But then let's do this. Come on. 1 over USD CAD. Okay, there you go. You see the divergence? You see the divergence here? This has to be resolved somewhat in a way. This has to be resolved in a way, one direction or the other. And trust me, it will. So look at this divergence. For those of you that think that perhaps USD CAD is not like, such a good proxy for crude oil, just look at this. Now we're looking at CAD USD in essence, right? So this is CAD USD and this is crude oil. Look at this divergence. So one of the two has to give. You decide which of the two, but one of the two has to give, right? So keep that in mind. One of the two has to give. So I'm paying close attention to this divergence. I'm not a magician. I don't know which of the two. If I had to guess, I think that crude oil is going to fail along with risk assets. So if I had to guess, I'm thinking that perhaps this move in the dollar is probably the honest one, and the resilience in crude oil and in risk assets is probably the false one. But that's my gut feeling. So, don't trade on that. It's just my gut feeling. Just letting you know. Somebody's asking about the VIX. So here's the VIX. So quite a significant move lower in the VIX. Of course, we're still far away from the lows, watch this 25 horizontal support area, horizontal support resistance area as support in this case, right? I think from a risk reward perspective, the closer to 25, the best the risk reward ratio to look for. One more leg at least higher in the VIX. That's what I think. Okay, something like that. That's what I think about it. Palladium and IWM. I did cover Palladium. It's still coiling in what looks like a bullish consolidation having to do with the IWM. Where is it? Here it is. Currently backtesting this wedges trendline support as resistance. From a risk reward perspective, I think it looks good for a continuation lower from here. From a risk reward perspective, admittedly, I mean, the trend is still valid, right? Higher lows, low, 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 and might prove to be a low, right? But I think that this move lower is incomplete. That's what I think. I think we should see at least, at the very least, one more leg lower, and at the very least towards a retest of this high before we can continue higher. And that's like, in my opinion, you know, the most bullish case scenario, right? That's what I think here. Yeah, I think that's it. We covered everything. Okay.
That's cool. Thank you, Steve.
Oh, wait. Following what I missed the morning webinar. Oil is on my radar. Your outlook and analysis. Natural gas, supposedly warm winter in the US. Yeah, sorry, I didn't see that. I covered natural because it was in the question box. I was looking at the chat. I did cover natural gas, and I think that natural gas has broken out. And here's why. There you go. I think it's a clean breakout from this channel. So I would really not fade it. I think that against 270 to 75, we're bullish. And by the way, guys and gals, I think we're going to have an interesting day ahead of us. Crude oil seems to be, the dollar seems to be accelerating higher. Let me be very, very, very clear. I know this is a highly manipulated market, but I find it highly unlikely that if the dollar strength pursues, we can see the S&P stay where it is. I think that from a risk-reward perspective, looking at the dollar move, fading the S&P up here makes a lot of sense. I will personally actually do it as we speak. I'm actually going to personally be shorting here with a stop loss against the highs, half of a position. So I'm telling you in advance. Okay, that's it.
Awesome, Steve. Thank you very much.
Okay.
Bye, thank you, everybody, for supporting us, and we'll see you tomorrow.
Yeah. Bye.
Thank you.